Alright guys, welcome back to the channel. So we are going to do a quick technical analysis of Ethereum. We're going to be using the Fibonacci retracements. This is going to be a quick short video, but usually what happens when Bitcoin pumps like it's pumping right now, right now BTC, we're at stinking 28. We just hit, we had like not a flash crash yesterday, but we dropped as low as, I think it was 25.8. And now we're all the way back to 28. So quick recovery in less than a day. Actually, it wasn't even a day. It was less than that. Well, yeah, that's exactly what I said. Let's go back to our trading view chart. So here's the Fibonacci retracements. Right now, Ethereum is really undervalued right now. This isn't financial advice. This is just my opinion and watching trends and what they do. Usually, this is when Bitcoin took off to 20. Ethereum followed right behind it. So what you can see from this is, if you look, you have Ethereum getting ready to pop its head right above this 5. Last time it popped below the 5, which is in the Fibonacci retracements, that's either between your bearish to the bullish sentiment. So right now it's at, well, the 5 is around the 782 mark. It actually came down to here, popped up, well, not came down here, but came up, stopped here right when it's peaked its head right around the 800 mark, and dropped down. It was a quick drop, so it was a quick way to get in. People could have got in around 682, and then it just shot to the moon. Just did a moon shot all the way up to 1400 just about, and that's when it came back down, retested, stayed above this line. Then it popped its head below this 5. That's a sell signal right here. And it quickly retraced back, and then it came all the way back down and went into the bearish sentiment. Once it hit the bearish, then that was kind of, it's over. And then it tried to retest and said, nope, not today, bro. And we were in a negative market for about 2 years. Somewhat positive. If you on a short term and a smaller chart, you can see it, but then it still went bearish. This is when we had the little COVID thing going on, but then it went all the way back up. Now we're getting to retest this 5 or this 50% mark. This is going to be huge. This is going to be a mark to watch. So it's going to be around the 784 to 800 level. That's going to be a mark to watch. Once it confirms above that, I'd say maybe 825, 850, and it stays above there 1 or 2 days. It's to the sky after that. I mean, the next retest is going to either be maybe around, I wouldn't even say that. I'd say the next one, just because of the numbers, 1,000. Some people will think, oh man, it's 1,000. It's just like the 20,000 with Bitcoin. But once you pass 1,000, then it's like, well, what's another 1,000? Well, why not get 2,000 and so on. That's how it goes. And then the next big one, obviously the next big one is going to be each 1,000, but once we start getting around 6,000 or 7,000, then the big one is going to be 10 and so on. But yeah, that's my quick chart analysis on Ethereum. I'll go ahead and put well, there's no need to put a link in the description. This is on tradingview.com. If you guys want to check it out, you can play with it. This is how you can find the Fibonacci retracements. It's this third section. Go down and look for Fib retracements. A lot of traders use this. I don't recommend trading. I recommend investing in the long haul. That's what I'd recommend. Because if you don't know how to trade, well, you're gonna lose your bonds pretty quick. Because you'll be like, oh no, I missed the boat. Let me buy now. Bam, destroyed. Anyways. Thanks for watching, guys. If you like this video, hit that like button. It really helps the YouTube algorithm so people can check out these videos and check out my channel and see some information I'm giving out. At this channel, we like to teach you about cryptocurrencies, how to become your own banker, and teach you a little bit about some of the unknown altcoins and some of the projects that are not really getting any exposure at all. So thanks for watching, guys. See you in the next one.